consolidation. We've been in this 200-point band for a while now. Do you see this continuing, or do you see fresh highs again?
Well, that's precisely the point. I think if we look at the markets around the world, equity markets around the world, in 2017, we had very strong performance in Asia, and as I said, in India, and we had very strong performance in Europe, where many markets are up between, say, 17 and 22%. So I think, given the economic outlook in the world, the second half of the year will not bring about similar type of returns. You have to understand, we're living in Europe and the US in essentially almost zero interest rates environment. And to have this kind of performance we had in the first half from equity markets is an incredible performance. So my view would be that the second half will be more difficult, and I wouldn't be surprised to see, say, the US market going down or the leadership changing. The leadership in America has been FANG stocks, Facebook, Amazon, Netflix, Apple, Google, and so forth, and similar type of stocks, semiconductor stocks. And I wouldn't be surprised if these stocks were lagging in the second half of the year and that the leadership will change. The same, I think, will occur in India, where maybe the index is not moving much, but within the market, some stocks will perform well and others not so well. So in other words, I think it will be in the world in the second half and going forward a stock picker's market, not an index market.
Okay, a stock picker's market and not an index market, and we may not see the kind of returns that we've seen in the first half of the year in U.S. markets, likely correction as well. You speak about the possibility of leadership change at the index level. So far, it's been all the tech stocks like Amazon, etc. But what could take up the mantle from here on?
Well, that is precisely the point I wished to know. What leadership will emerge around the world and replace the FANG stocks, the tech stocks, and so forth? That I'm simply not yet sure. And I need to watch the market for another like 2-3 months before I could come to a conclusion.
So, Marc, you have been in general bullish on emerging markets as well, but where's India right now in the pecking order?
Well, as I explained, India has had the best performance this year, or one of the best performances. Venezuela had a better performance, I should point out, from a very depressed level. So, as I mentioned, I think that the Indian market could correct here. Given the favorable fundamentals for the Indian economy longer term, I wouldn't be overly bearish. And what we also have today in India is a relatively stable currency. The currency has actually appreciated this year. And now I think the rupee may weaken somewhat. But in general, as I said on your program many times over the last 6 months, if I had to invest for 10 years and I had to choose between the US and India, I would choose India because I think that India will outperform the US. So I hope this answers your question. More than that, I cannot explain to you.
Okay, Marc, got that. So you are calling for a correction, but only perhaps a near-term small issue, nothing material, nothing long-term. Let me then talk to you about a different sector, banking, because that's where the big fight is. The whole approach to resolving bad loans, that has changed. Now we have, a time-bound process in place. 12 accounts have been chosen by the RBI. How do you rate this, and do you like Indian banks?
Well, I mean, basically, I'm positive about financial stocks, banks, and especially insurance companies. And I think eventually they'll clean up their balance sheets. And banking in India, in a country of the size of India, and where banking is not yet, hasn't proliferated very much, I believe the long-term potential is huge. But equally, we have to understand there are huge technological changes underway in the world. Just think of the retailing industry in America. When I started to work in 1970, two blue chip companies were Sears and J.C. Penney. Both of them are about to die. And so these technological changes will also change the way banking is carried out. And financial institutions that understand these changes and will implement the technologies to accommodate these changes will do well, and others, in my opinion, will not do particularly well.
Okay, any other sectors that you're bullish on right now, Marc?
Well, I still think that the financial stocks will be okay. They have underperformed for years, and now they started to outperform. So that's a sector. Secondly, in my asset allocation, I have always 25% in real estate. And I think that some real estate in India may not be particularly attractive because it is fully priced. On the other hand, there is still plenty of real estate that is, in my view, going to move up substantially in value. And so I would essentially focus on real estate investments in India.
Finally, Marc, are you still a commodity bull?
Well, obviously, commodities haven't performed very well. But I'd like to say this. The price of gold went up 8% last year against the US dollar. So it was a very strong, it was essentially one of the strongest performing currencies. This year, gold is up 7% against the US dollar, whereby the US dollar has lost 7% against the euro. So in euro terms, we're even. But it hasn't been a poorly performing commodity. And some agricultural commodities, in my opinion, are very low at the present time and could easily rebound in the second half of the year. But overall, I think that given the slowdown in growth around the world, which is very different from India, where there is kind of an acceleration of growth that is possible. Around the world, there is a slowdown, certainly in the US. And so, given that scenario, I would be a little bit cautious about industrial commodities at the present time.
All right, Marc, good talking to you as always. Thank you so much for joining us on the show this morning.